ASML is scheduled to report quarterly financial results on January 29th, 2025. Of course, ASML is a supplier to the semiconductor manufacturing industry to companies like Taiwan Semiconductor, Intel, and others. So this company has huge implications for what's going to happen in the artificial intelligence industry. So a lot of investors are watching ASML stock as one of the prime beneficiaries of the growing demand for AI. But should investors buy ASML stock before they announce earnings? That's the question I'm going to answer in this video, and I'm going to provide a preview of what investors should look out for from ASML in the upcoming quarterly release. Let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So in the latest quarter, their net sales jumped from 6.2 billion to 7.5 billion. But the big disappointment was the bookings decline from 5.5 billion to 2.6 billion. One of ASML's biggest customers is Taiwan Semiconductor. And yesterday, I evaluated Taiwan Semiconductor's report that had great news for ASML stock investors. In that report, Taiwan Semiconductor said that in 2025, they're going to increase their capital expenditure budget by $10 billion or roughly 33%. In 2024, Taiwan Semiconductor spent about $30 billion on capital expenditure. And in 2025, they plan to spend around $40 billion. So a $10 billion increase in capital expenditure. A significant portion of that capital expenditure might go to ASML for its EUV and AUV machines that are the most advanced in semiconductor manufacturing. So that was great news for ASML investors. And one of the reasons why ASML's results in 2024 were worse than expected was because Taiwan Semiconductor was slower to increase spending in this category, and also because Intel and the troubles it faced, it also paused and decreased some spending in its manufacturing expansions, in its research and development, and its upgrades in technology. So hopefully the news from Taiwan Semiconductor gets reflected in this upcoming release for ASML, and the outlook becomes better for ASML stock investors. The company's management team saying that while there was continued the strong developments and upside potential in artificial intelligence, other market segments are taking longer to recover. It now appears the recovery is more gradual than previously expected, and this is expected to continue in 2025, which is leading to customer cautiousness. And I can confirm that this same statement in various forms is coming out of nearly every semiconductor company. Taiwan Semiconductor yesterday said very similar things. Micron Technology said very similar things. Intel said very similar things. AMD said very similar things. Anything related to artificial intelligence is booming, and then anything outside of that is struggling. So you could think of AI as the high performance computing. These are data centers optimized for artificial intelligence. That segment is booming. But segments related to smartphones, personal computers, laptops, tablets, automotive, and other factors, those are all growing a lot slower than expected. There was expected to be this boom in those sectors in the back half of 2024 because there's been a gap in sales of those products for the last couple of years. Consumers spent a lot of money in those categories in 2020 and 2021, and they've kind of not spent that much in that category in 22, in 23, and in 24. So investors and market forecasters are thinking, well, these products are getting old, right? People's smartphones are getting older, their tablets are getting older, their laptops, their personal computers are getting older, their cars are getting older. They were thinking there would be this big replacement cycle, myself included, especially in the computer industry, that has yet to come to fruition. And so ASML reiterating that statement that I've heard from nearly every company that's participating in that industry. ASML saying that fourth quarter total net sales between 8.8 billion and 9.2 billion is to be expected, with gross margins around 50%, which includes the recognition of their first two high NA systems upon customer acceptance, reflecting progress on their imaging overlay and contrast. Furthermore, they expect 2025 total net sales to grow in a range between 30 and 35 billion euros, which is in the lower half of the range that they provided in 2022. They expect gross margin at 52%, which is also below the range they provided. And this is mainly related to the delayed timing of EUV demand. And this delayed timing of EUV demand was partly from Taiwan Semiconductor, partly from Intel, and partly from others, as they waited to invest in that category for the return in demand in those other segments. And also, Intel faced huge trouble in its business and had to delay its spending. And so that had something to do with it as well. I'm sure Intel and ASML have had ongoing conversations, and ASML was expecting Intel to continue spending robustly in these new categories in their new foundry business. But then, of course, I don't need to remind you all of the troubles that Intel faced in the last year. They had to pause the dividend. The CEO got forced out because of those aggressive spending plans. And so it's understandable that Intel had to decrease investment in new technology in manufacturing expansion as a result. So ASML is now trading at a forward price to earnings of 25, which is near the cheapest you've been able to get this stock in the last 2 or 3 years. And the struggles over the last year and a half for ASML has brought this highly competitive advantage business into a attractive valuation. You've rarely had an opportunity to buy this stock at this price. And we talked a little bit about their EUV product. It's unmatched in the marketplace. They have a near monopoly in these products. And so when you have a company like that, that's significant, and you want to, or you are willing to pay, I know I am willing to pay a higher price for companies that have such products that are so advanced that it's difficult for anyone else to match or come near it. Now, another way I looked at ASML's valuation is through a discounted cash flow model, and my intrinsic value per share came to $770, with the market price currently at $756. This would suggest that it's fairly valued according to my DCF. And I always say I'm always willing to pay a fair price for an excellent business, and ASML definitely ranks up there as in the categories of excellent businesses that I would be willing to pay a fair price for. So I do have ASML stock rated as a buy. I updated that recommendation today. I don't think it's so undervalued. In fact, I just shared with you that I think it's between fairly valued and slightly undervalued. I don't think the undervaluation is significant enough to warrant me saying that, yes, you should buy everything you can before the earnings announcement. If you're on the fence about buying before or after, this fits in the category of my general recommendation where I say buy half before earnings and half after earnings to reduce your risk of volatility in the price surrounding the earnings release. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.